Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers, and I'm here with Chris Bates from the Flint Group. Chris, how's things?
Doing well, Pete. Doing well. I had Monday off yesterday. We're recording this on Tuesday down at Jamboree with the family. Stayed in an old little farmhouse with some friends and, got to pat some donkeys and play with some chickens. And, that was a good little weekend away. It's such a, I absolutely got some, attachment to the South Coast down around Kiama area. We got married down there and, it's one of those places where I wouldn't mind spending my later years in life. Maybe not now, but at one point, I think that's where I'm going to gravitate towards.
I actually got married at Kiama on the beach down there. I thought thought about inviting some people, but then when I looked at it, I'm from a very large family, and I've got brothers, and then their spouses and partners, and then nephews and nieces. I thought, you know what, this is way too hard. And then it was just a very quick registrar beach wedding. But it's a long time ago now. I wish I had have bought somewhere down in Kiama, because I've seen the prices there more recently. Gee whiz, haven't they moved over the past 4 or 5 years? So, it's a great spot. Did you get to the water park down there at Jamboree?
Oh, no, it's middle of winter, so it's closed. I did actually look at it, and we did the Illawarra Fly, which is like I don't know what you call it, a boardwalk in the sky. And I was going to stitch my daughter up, who's just turned 4, and get her to do the zip line, but they were fully booked. But she would have probably got a bit scared when I saw how high it was. But anyway, what's been happening in your world, Pete?
I haven't been down there for so long. We used to go up to Saddleback Mountain back in the days when I didn't have kids and I had a camper van. The easy life back then, playing life on easy mode before kids. So what am I doing this week? I'm actually going to Rhodes, Faliraki. Not the party bit, the old town. So I've got a week in Greece lined up. So we've got a state of the market episode coming out with Owen, and we've got this one with 2 cents, and then I'll disappear off and I'll re-emerge with the suntan hopefully in a week's time. So otherwise just keeping my head down and ticking along, I guess. So let's have a look at what we're going to talk about this week then in property world. So we've got 3 stories. Australia's Halfbuilt apartments, a macro business article looking at the slow rate of delivery on the housing supply. News.com, Australia's adding 1 migrant per minute. A nice clickbait headline there, but some interesting points made nonetheless. And then thirdly, I think this one was Nyla Sweeney in the AFR. Homebuilding slowdown fuels Perth's rocketing prices. Perth prices are up actually 25% from a year ago. So it's a full-scale property boom over in the West. So, Chris, let's start with this half-built apartment story. This is something we've talked about a little bit on the podcast over the past year, I guess. When I've sometimes said, where are all these dwellings in the pipeline? We've got officially very high numbers of properties, but we've got now construction insolvencies. They're going to be, by the end of this year, they're going to be a record high for a calendar year. I think if you look around the traps, the latest ABS figures show, there's quite a lot under construction in Victoria in terms of units, and Perth is definitely picking up for houses. And certainly if you look around places like the Gold Coast and other parts of coastal Southeast Queensland, New South Wales, there's some little pockets of premium level apartments, but it does seem that overall developments are only moving to completion very slowly. We're getting about 40,000 completions a quarter. It's way down on what we need, because the construction target's 240,000 a year. So it seems that even though we've got officially quite a lot under construction, a lot of it's just either stalled or just not going very quickly. And I think I saw a forecast this week that said the 1.2 million dwellings over 5 years were more likely to get less than 1 million.
Yeah, I think the real issue here, which we've spoken about lots, and sorry if we're repeating ourselves on this podcast, but the cost to build, when you add in all the taxes, the cost to buy the land, the holding costs, the construction costs, the profit the developers should make on taking that risk, that cost is just way above what people can borrow and people are willing to pay, particularly when they look at a lot of established costs. They say, well, why would I buy that new when I could buy this established without the risk and without having to wait and go down a whole bank process? And that bank builder insolvency issue is a real issue, right? Like, that's our capacity of future work. And so every time a building company goes under, that's one less builder, assuming they don't come back into the market, that could be building houses in the future. And I really wonder how bad this is going to be in a few years' time when we say, okay, yep, now the dynamics and are really suiting a building boom, but hang on a sec, who's actually here around to build? And where did those builders go? And have they got the desire to try to take advantage of that boom because they haven't got as much liquidity or they can't get as much bank finance, etc. So absolutely, there's certain pockets around the country that builders are going in, but usually they're low density and they're not super high density, and they're usually targeted towards the more premium end of the market and downsizers. And so you can still drive around, but I think what's the issue we're finding is that bit by bit, what's getting built today was actually 2 or 3 years ago when it actually all sort of kicked off. And my wonder is what new cranes are going to go up, as these ones get taken down, and dwellings under construction, are we going to see that really taper off over the next few years? And then hopefully that'll create a little bit better building prices, but that'll only be, I guess, relevant if labour costs come down. And I think there's been a lot of talk in the last couple of weeks with unions around labour costs actually going back up. So what's your take on that issue, Pete?
Well, that's going to be an absolute raging battle, isn't it, between the construction union and the Labour Party. Traditionally, a lot of ties between those two institutions. And there's been some media exposés on corruption, which we don't need to sort of delve into too much. But obviously, the unions are going to be pushing for significant wage increases around the states. And that's not going to help at the moment. I think if you look at the macro business figures here, Leith Van Onselen, I'll just read out a couple of the stats. 172,000 dwellings completed over the year to March. So that's about 78,000 short of the government's target of around 240,000 a year. And the forward-looking construction indicators even worse. Only 164,000 homes approved for construction over the year to May, and that's 76,000 below the construction target. And commencements over the year to March, 159,000. So that is that's a third, isn't it, less than the government's target, 81,000 below the target. At the same time, immigration is very strong. So I think, officially we might have a stockpile of homes approved for construction, but because of those high materials costs you mentioned, the high financing costs you mentioned, labour shortages, but also the cost of wages under a lot of pressure as well. All of those things just aren't helping. We can relax planning rules, but that's not going to be the sort of magic bullet that gets everything moving, because the conditions at the moment just aren't really that conducive to getting a lot of homes built.
Yeah, and I guess a lot of the Greenfield estates are owned by the few that will release stock when it's actually a good time for them to actually release more supply onto the market. They do have a bit of an ability collectively to slow down the release of land, to push up land prices so they can make a profit. And so I think they're going to really hold off letting, turning a lot of farms into house and land packages till it's a really good time. And, a lot of mum and dad sort of builders can't get those, do those smaller developments. They just can't get the finance or have the desire or the risk appetite, or can't make the economics or feasibilities to stack up. And so, and a lot of the high density doesn't stack up. So what you need in a building boom is all elements of the market to be really favourable. And at the moment, it just doesn't look like that. I mean, the population, I think your macro business numbers are really interesting, right? You see that the dwelling commencements are really collapsing at a time when we're going through enormous population growth. And those two things just do not add up. You actually need commencements to be going up with people.
It is. And it kind of ties in exactly to our second story, which is from news.com.au, so News Corp story. Australia adding 1 new migrant per minute. So obviously the government proposed to cut net immigration. And I do think actually when we look back, we'll see that immigration probably peaked in the early part of 2024. But even still, population growth is still pretty high. So the article said Australia is adding a new migrant every single minute. Amid claims the government's promise to bring the numbers back to sustainable levels has already been broken. So data from the ABS suggested the government's already exceeded its net overseas migration target of 395,000 for the most recent financial year. That's Institute of Public Affairs, or IPA, analysis. And the article goes on to say, facing growing political pressure, the government had promised to cut migration to more sustainable levels of around 395,000 in 2023-24, but it looks like we've blown through it. And between January and May, we've had the highest first 5 months of a calendar year on record, net intake of 242,750. I look at the ABS figures myself, and it looks to me like, well, yeah, population growth is very high still, but I do think the high watermark was actually around February, as far as I can best tell from my monthly analysis. So I think eventually we'll start to come down the other side. There's a few things just at the margin that are making a difference. There's not quite so many international students getting approved and things like that. But the year-on-year figures will probably start to roll over now. But still, I still think we're going to see a big number for this calendar year, and that's really in the context of those very low dwelling completions that we've seen.
Yeah, and I guess the new metro line's live in Sydney in a couple of weeks. I'm pretty excited to jump on that, to be honest, and experience it. I think it's a bit of a game changer for Sydney, and I do think it will unlock a lot of feasibility, particularly what Chris Minns is doing in New South Wales to increase zoning around major transport hubs. And so I wonder if that's going to be a bit of a catalyst. The line, a lot of people don't realise how good something is until they experience it. And I do think the metros, everyone's going to go, wow, what a game changer for Sydney, and have the ability to move around the city much easier like it is in other global cities around the world. And so, once it's live, people are using it, maybe the demand gets sucked towards this metro because people realise how good it is. Maybe the feasibility is there for the developers, and all of a sudden a new round of developments get kicked off. I mean, that's probably my optimistic brain working. But what do you think about that, Pete?
Well, yeah, definitely. I think as well, actually, just in tandem with the government theme, I wonder whether this is going to be, with the very short electoral cycles in Australia, I think this could actually end up being a key election issue. I wouldn't be surprised if the coalition opposition runs with cutting population growth as an election issue, and probably, as you said, fast-tracking approvals as well. Just there's so many people who are struggling with the rental market. I wonder as well, in the context of population surging, well, that's obviously been contributing to inflation and things like construction, rent, services, household consumption and things like that. So I think it's, when's the election coming around? It's 2025, is it? I suppose around April, May, potentially. So it's not a million miles away. And I think the opposition leader, Peter Dutton, has been looking for areas where he can target the government. And I think nuclear power is one area that he's decided to focus on. But I just wonder whether, as you said, upzoning, sorting out housing supply, but also maybe just cutting back the immigration numbers. It's a point of difference that they could run with. So I just pulling my thoughts together there. I just wonder whether in a year or two's time, we might see that population growth figure coming down towards more normal levels potentially.
Yeah, and I think what we will still see, even though the government probably hasn't got much money, they can do these sort of activation things. I mean, like obviously there's a new light rail being talked about along Broadway in Sydney, and that completely changes what it's like to live along Parramatta Road, and versus what it has been in the past. And does that then light up that sort of part of Sydney to build more supply? And so
what do you reckon about light rail? When they build the one through down George Street and then Anzac Parade and Randwick and through the Surrey Hills area, I mean, it's an awful lot of disruption, isn't it, to get in a form of transport that is still reliant on effectively it's a bit like putting a train through the city. Do you think that's the way of the future, or do you think there's a quicker and easier way to do it? I suppose Parramatta Road is a bit hellish to drive down. I think I picked up 3 demerit points jumping a red down there actually through Broadway. But it's as you said, I mean, that's one of the areas where there's going to be a lot of focus on new housing supply. If you're going to upzone, I mean, that's an obvious place for it to happen.
Yeah, I mean, in Sydney, I think it's a bit irony, isn't it? Because there used to be trams all over the city, and now we're putting them all back in, 50, 100 years later. So that's, I think, the irony in Sydney. So it's like, are we going back in time? But ultimately, I mean, I have jumped on that one in eastern suburbs of Sydney a few times, and just the predictability of it, and jumping on and being able to stand up, jump off, and, a really long tram. I do think it's nice to get around, and maybe it's not as efficient, but I think as the city gets bigger and people are less reliant on cars, I think any type of transport that's public is a good idea, and maybe it's better than trying to have to go underground and put big subways in.
True. From a cost point of view. I've got one other thing before we jump onto the third story, Chris. Just saw CBA put out a really neat graph of PCA office vacancy rate figures this week, and office vacancy rates, at least in Sydney and Melbourne, are still trending higher. Now, we talked about last week, Dexus and Lendlease have announced plans for 2 gigantic 300-metre office towers, Bridge Street and Pitt Street in Sydney CBD. So they're obviously trying to sort of bring the CBD area back to life with some big plans there. But if you look at these PCA figures, we've got, Brisbane and Perth actually not faring too bad, and vacancy rates have been coming back down over recent years. But Sydney, Melbourne, and also Adelaide, vacancy rates are trending still quite sharply higher. And nationally, office vacancy rates are around 15%, which is the highest since the early 90s recession. What are your thoughts on the office space? It seems to me, I mean, I'm a casual observer here really, because I'm not active in the space, but it seems like the A-grade stock is leasing pretty well. And then the old sort of poor B and C grade office space where people are rammed in like battery hens, they're really going to struggle to achieve the same rents as before, because obviously COVID has accelerated that working from home trend.
Yeah, look, there's a lot of big developments in the pipeline. You've got these 2 what you call super talls in Sydney coming. And I think I mentioned last week on the podcast that this got announced last week, but I sort of hadn't checked if there was any pre-commitments to this office space, which a lot of the developers will probably do. This AAA graded, maybe I still need an office in the city, but I'll take, 1,000 squares or 2,000 squares versus 4,000 squares. And I'll make it more of a co-working sort of environment where it's not fixed desks and hot desks, etc. And it's a really amazing space to collaborate in, rather than the typical sort of lots of desks in a room option. And so, I mean, just going through some of the towers that are coming, you've got those 2 super towers. You've got Atlassian's down near Central Station. A couple of big ones around sort of Pitt Street are going up right now. You've got down at Darling Harbour, you've got the whole new harbour side going on there. That's pretty amazing, that development. And on the other side of the water there, near those CBA towers down at King Street Wharf, I think there's another tower going in there. And it sort of goes on and on. There's a lot in North Sydney, around Victoria Cross. There's a huge tower going on, and there's some other ones sort of approved, etc. So Tattersalls have got a tower. There's lots, all down at Circular Quay. You've got One Sydney Harbour, which I think that's residential, but you also got a hotel next to it. I'm not sure if there's any commercial in that. So near the Waldorf there. So
there's already the Barangaroo towers there, and there's been some jostling around those international towers because it's a heck of a lot of space, and the demand for the amount of space and office attendance rates are they're 3/4 of what they were pre-COVID times. So there's definitely going to be a bit of a shakeout. I just don't know how dramatic it's going to be. I think if you look at in some of the cities in the US, there's been some cataclysmic declines, but Australia doesn't really seem to have had that. I think from a macro perspective, bank exposures are pretty low here. Lending into office space is pretty conservative. So I don't know. Unless we get a spillover from overseas, it doesn't seem like it's a systemic risk. But I do think that some of that lower quality office space is really going to struggle with all of that new stock coming on. Who's going to want to rent the sort of cramped old commercial office space. Some of it may get repurposed or demolished. I don't know, but of course, as mentioned previously, we're a very high population growth country in Australia, especially in Sydney and Melbourne. So I think over the long run, probably no issue, but maybe some short-term pain there in the lower grade stock.
Yeah, Pete, I'm not sure if you also saw, I'm going to put you on the spot here, but there was a AFR article on property sales over 5 million, and you can see all the way back into 2020, sort of even down to 2015, there's only about 1,000 sales above 5 million. But in the last 3 years, that's gone from roughly, circa 1,000 to 3,000 or 4,000 sales over $5 million. And what's your take on that, Pete? It really shows that on the upper end that there's been a whole new level of property values getting attained across the country when you've almost tripled the number of sales above 5 million.
It is. I mean, it does seem to be just one of those things that the more wealth there is in Australia, the more money gets parked in land values, residential property values. Australia's become the number one destination for global global millionaires now. So some of that's from India, some's from China, Russia. But yeah, it's just even in Brisbane now, we're seeing the number of multi-million-dollar sales is just really shot up. Luxury property in Australia. I mean, I think I've got the stats up here now from luxury property reporter Bonnie Campbell at the AFR. The number of property sales above 5 million has surged 1,151% in the 2 decades to 2023. Tim Lawler said over the 20 years, the homes selling for 5 million or more has increased 12-fold. And a big surge, I guess, between 2019 onwards. I mean, you're seeing it more and more. It used to be, I mean, I can remember the news article reporting the first $1 million apartment sale in Sydney, and you look at it now and you think, the people don't even blink about $5 million sales. I think there was one in Chatswood this weekend, just a house, basically 5.2 million. So it's definitely moved on, but it just seems to be the way the luxury property goes. The more wealth there is, the greater the sales. Actually, I've just got the stats here. So total dwelling sales in 2021, gosh, there were a lot. That was the peak, but just on an ongoing basis now, thousands and thousands of sales every year of above 5 million, mainly driven by Sydney and Melbourne, but also a few popping up in Perth and Brisbane as well. Yeah, another good article I saw this week as well, which we'll throw in here as well. It's just been announced this morning, was there's a company called Assemble, which I'd encourage people to check out. Chris Daff, I think he runs that, and he's basically been able to convince. I used to do him on the Elephant, probably 5-6 years ago, and when he was very early days in this journey around sort of being a bit more social conscious to developments, and he's been able to convince the super funds to start to get behind developing, which hats off to him, to be honest. It's always been one of those conversations is you've got now 3.9 or something like that in super now. I remember trillion I'm talking about. Well, I remember when I was back in advice days, and I think that was 1.4 trillion. And, I remember seeing a graph, in a decade's time, there's going to be all this money in super. And, those numbers just felt, unachievable, to be honest. But that's compounding growth at work, plus all these contributions that we've been making into super over that time. And also, a lot of people don't spend their money in super because it's in a tax-free environment. And so it encourages you to try to leave as much as you can in there, and use your other assets first. So super's got this huge amount there, and, the ability for that money to be repurposed for a social need, i.e. housing, and two, an investment fundamentals. And that could be in build to rent, or it could be what Assemble are doing, which is encouraging people to sort of rent before they buy. And so it allows people to get key worker housing, from my understanding, and then actually potentially buy it down the line. And hats off to Chris, because, Australian Super and Hester have come out this morning and said, we'll put 15 billion in over the next 10 years. And while that's not much, really, when the housing market's worth 11 trillion, you put 15 billion in there, it's not going to move the needle. But it's also, someone's got to start this train off. And I think that's a really good initiative. I did see the article. So Australian Super and Hester are backing Assemble in the development of up to 17,000 homes over the next decade, largely targeting affordable housing. It doesn't sound like a lot. When you break it down by year, it really doesn't move the needle. But as you said, it could be indicative of a wider trend. I think one of the lines that will catch people's eye is about Australian Super saying we see an opportunity here to make good risk-adjusted returns for the members of Australian Super and get housing built. That's really the paradox, isn't it? We're talking about developing affordable housing to get more people have the opportunity to rent their own place, but actually the super funds are talking about making good risk-adjusted returns for their members and investors. So, I think that was one of the criticisms we had around build to rent when it was first being talked about all that time ago. So, well, there's a conflict between the different sort of participants in the market, because obviously the investors want to get good returns on their money, and the renters don't want to pay too much. But there's a tension between those two things. So, let's wrap up with our third story of the week, Chris. Homebuilding slowdown fuels rocketing prices in Perth. We've talked enough about the full-scale property boom in WA. I had a sort of a nose around when I was in Perth a few weeks back, and I think it would be fair to say there just aren't many unit projects being built at all. But you can see in the suburbs, houses are starting to see more and more approvals. But the article surmises, this is Nyla Sweeney in the AFR, Perth dwelling completions are dwindling miles behind the required rate. Developers are actually saying there's a shortages of builders, and there's a general sort of reluctance to work on projects, and a lot of them aren't stacking up from an economic perspective. So I think, this is a quote from the article, a melting pot of costs has driven up the cost of construction in Perth, where the market is just not meeting the cost, meaning projects don't stack up from an economic perspective, particularly in the apartments and medium to high density space. We just don't have enough builders to do these big projects. So interesting. Normally when you see prices up 25% in a year, people would be queuing up to get developing, but it's just at the moment not keeping pace with very high population growth.
Look, my take on this is that high density isn't the stuff you want to be building in Perth. I think you want to be targeting the aspirational sort of family market, and even part of the affordable part of the family market as well. Is that, once Perth house prices get really expensive, then you can say actually a lot of the demand will flip into actually I can't afford a house anywhere that I want to live, and because I can't do that, I'm going to go and buy an apartment. And I think also the downsizers aren't really forced to downsize there as well, because they're sitting on houses and they're going up in value, and so there's no urgency for them to sort of downsize as well. So I reckon it's really just a timing issue. High density, where that'll stack up is when a lot of the demand moves there. And I think because Perth, even though it has gone up so much, a lot of families are saying, well, I can still find something that I want to live in long term. It hasn't gone beyond achievable. Whereas if you look at somewhere like Sydney, for example, house prices and that shift in society around the demand has actually happened. A lot of families are saying, well, yes, I'd love to own a house, but to do so, it means I've got to spend X. I can't afford that. I don't really want the mortgage for that. What I am going to do is shift into a really nice, bigger apartment in an area I want to live. And that change has absolutely happened. I would say in a lesser extent, Melbourne as well. Melbourne house prices are still probably affordable. If you wanted to, yes, you've got to maybe move a little bit further than you want to live. But I think that change to flexible work has sort of allowed people in Melbourne to live a little bit further away and still get a house that they want to and still achieve what they need to with work. At Brisbane, I think it's in that bit of a shift at the moment. I would say that it's, houses are starting to get more and more unaffordable for families, and families are probably starting to think about, do I just buy a really nice apartment in a good suburb? But I still think there's probably options for people in Brisbane. What's your take, Pete, on just where that Perth are is in the cycle, really? It's just not really at a point where people are desperate enough to have to live in apartments.
Not yet. I think building approvals for houses are ramping up as well. I can't really speak so much for WA because I spend very little time there, but certainly in Brisbane, we actually have a couple of engagements right now with people budgets around 800, 850, and they're looking to buy a unit in a blue chip area, blue chip suburb, rather than take that budget and move miles away from the city, which is increasingly the challenge in Brisbane. I think more and more people are saying, well, I'd rather live in a blue chip area where I can walk to the cafes and get into the city really easily. But yeah, the budget that you need has jumped quite substantially over the past 3 or 4 years. So, and that's pushed more people into looking at townhouses, looking at units. So it's a different city though, Brisbane. It's not really like a mature city like Sydney, where people will live miles and miles out from the CBD. It's not really that kind of a place. So Greater Brisbane is a big area, but the area from Brisbane GPO where people really want to live is sort of 10 to 12 Ks, I suppose. It's relatively more compact. So yeah, it's still a pretty tight market. People are still looking for off-market properties where they can. And I imagine, at the moment, most people in Perth are still looking at houses because there are relatively more affordable options, but it's changing. So that's the journey of a city. So I think, well, let's wrap up on those 3 stories then. Australia's half-built apartments, housing supply not really keeping up. Australia adding 1 migrant per minute. So that's something that'll get a bit of airtime as we run up to the next election, with pressures on the rental market in particular. And the home building slowdown fuels Perth's rocketing prices. Actually looking through those, there's a similar theme, isn't there? Weaving through all those stories, there's a lot of people, not much capacity at the moment, and that's, I guess, one of the things that's been pushing inflation up. Chris, before we go, I just want to give a quick plug to the Rask community forum. So if you go to community.rask.com.au and you can check out the chat forums there. There is a section for property, but if you're interested in stocks and shares or other things, there's plenty of chat going on there. So do come along. And if you've got questions for what you would like us to cover on the podcast, do jump on there and let us know, because always keen to answer whatever is topical. What plans have you got for the week ahead, Chris?
Oh, it's a pretty quiet one here. We've got lots going on at work, and just a quiet weekend in Sydney, which it's strange for us. We do like to run away and explore the world in Australia. So what about yourself? You got to Greece? Are you going this weekend?
I've got one day at Headingley coming up on Friday, and then I'll be in Greece for a week. So you can maybe listen to Owen's dulcet tones for a week while I'm away, but it's only a week, so I'll be back on deck fairly soon.
Awesome. Thanks everyone for listening, and happy Sunday.
Cheers. Have a great weekend.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.